What's up, guys? It's Cash Flow Cart. Today we have a very exciting video, and that is the September dividend portfolio review. A few big announcements coming up, guys. The total investment value of the portfolio has just broken that $64,000 mark, which, I don't know the exact timeline of this, but if you've been with the channel, it seems like just recently I kind of had my sight set on that $60,000 mark. So, it's nice to be $4,000 past that goal in such a short amount of time. That's awesome. Today we will go over the new positions I've added since the August update, and we will go over how that affected my total dividend income. Excuse me. Today I have not done much, guys. It is Thursday, August 22nd. I don't have work today. It's already 7:12 p.m. and I definitely have not been as productive today as I would have hoped, but that's okay. Sometimes on our off days, it's all right to kind of, give yourself a break. Let's not go on a tangent. Let's focus on the portfolio, guys. The estimated annual income for the next 12 months from this portfolio is $2,525.13. That breaks down to a monthly average of $210.43. Guys, I have spoke on, short term, I'm really chasing that $250 monthly average. I'd say that's kind of my next overall goal for the portfolio. We speak on it a lot, setting milestones, having something, having kind of your next target in mind of, where you want the portfolio to go. And for me, I'm focused on that $250 monthly average. So we will get there. In the back of my head, I also have spoke on, I want to get the total investment value to $100,000. As we inch a little closer, I'm turning this monthly portfolio update series into kind of that, and also road to 100K. And ideally we can see, how my dividend income transforms as I near that 100K mark. And I think it's going to be really awesome when I do hit that and we film a video and talk about okay, here's $100,000 in dividends built out over time. What type of income does that look like? Okay, so that's kind of, where I'm thinking months in the future here with the channel and obviously the portfolio. Let's look at this month by month breakdown, guys. September 2024, I am estimated to earn $219.75 in dividends. And then October, my highest paying month. You guys know that is because the Altria quarterly payment falls in October. I am estimated to earn $301.58, guys. And then in November, $108.98. So, we're just going to keep trying to pump up those numbers. I do like to go through kind of and see how smooth my income is. However, that is the last thing I'm looking at. I'm more focused on individual stock opportunities. And then after I make those purchases, I kind of like to keep track of, okay, how did that affect the monthly income breakdown? Okay, guys, do not get so caught up in, oh, this is a lower month for me. I need to find stocks that pay here. I'll see all types of posts on social media get paid every month. Guys, that is not at all what you should be focusing on when you start out in this journey. It's you should be much more focused on developing your system, finding where you see value, and finding how you can be, the most efficient dividend growth investor, guys. So, let's get into the positions. First off, guys, we will sort by market value. And at the number one spot right now is Realty Income Corporation. That is a REIT. That is a monthly payer, guys. And the market value of Realty Income with its recent push is back over that $13,000 mark at $13,007.50, guys. We will look at the cost basis on these stocks as well, so please stick around for that. And that pays me in the next 12 months an estimated $678.54. Again, that's the only monthly payer. So in order to see those dividend checks, we would essentially divide that number by 12. Okay, does that make sense? And those usually hit the 15th of the month if it is a trading day, or those whereabouts. Moving on, guys, we have Altria coming in just shy of the 13K mark at $12,957.50, guys. This one has been great for me lately. I've seen some great capital appreciation, and like I said, we will go over it. But that position pays me an estimated annual income of $980. And if we do the math, I'm pretty sure my yield on cost on MO is over 10%, guys. That term yield on cost, essentially what you're doing there is taking your cost basis of a position and you're calculating the dividend yield using your cost basis as opposed to the price. Okay, so my cost basis on Altria is roughly $44 a share. I would essentially calculate the dividend yield using that 44 rather than the price of Altria being 51.83. Guys, that's what I kind of refer to on this channel as bang for your buck, being opportunistic, and if we can get in these stocks at undervaluations, that's how we're going to make the most of our money. That's how we're going to get the most bang for our buck. And for me personally, in this portfolio, I think Altria has been a great example of that, guys. Moving on, we have Apple. I've spoke on this before, but I have 50 shares of Apple, down from 63. I recently in the sense of a long-term portfolio, I recently trimmed 13 shares of Apple, and we will check out what it's done. I believe I trimmed at 214 and change. Now Apple's trading at 224. So I guess I, missed out on $10 a share. Missed out on is kind of, I use that loosely because I did reallocate those funds. But the market value of Apple is $11,226.50, guys. And that pays me an estimated annual income of $50 over the next 12 months. That doesn't seem like much, but for me, I'm hoping Apple can really be kind of a yield on cost type of play for me. Apple does have the free cash flow, and they do have the dividend sustainability to, more aggressively raise that dividend than something like Realty Income Corp or Altria. And I'm hoping over the next 10 years, we will see Apple start to really focus on aggressively raising that dividend. Okay, kind of similar to the growth rate we've seen on something like Broadcom, or Broadcom's a great example. Maybe Home Depot. I guess that's not as comparable. Let's move on, guys. We have Pfizer, ticker PFE. The market value of that one is $6,475.50, guys. That is my number 4 holding, and it pays me an estimated annual income of $377 roughly. I just recently picked up 3 shares of Pfizer, so real briefly, we will look at that trade. I went over it in my last video talking about investing $500. So if you guys want to check out kind of that live trade, I go over it in that video. But I just recently picked up, oh my goodness. Let's see if we can see the exact purchase. Sometimes these, what's it called? These little entry tags are kind of hard to read. Yep, I just recently picked up 3 more shares of Pfizer, to take my total position to 225 long, and I got those shares filled at $28.77 and, repeating 3. So now Pfizer is trading at $28.78. I'm basically break even on this tranche of 3 shares, but my overall cost basis on Pfizer is still $33.76 a share, and I am down, roughly $5 a share for an open loss of $1,123 on Pfizer, guys. That is okay. I was a little early to the trigger on this one. I might continue to build it out a little more, but it does look like we are finally seeing that long-awaited reversal, that Pfizer shareholders have been so patiently waiting for. So maybe I pick up a few more, but, we should hopefully get some nice capital appreciation in this one through 2024 and into 2025. Again, guys, that's my opinion. That's the way I see things. That is not financial advice. I must say that for sake of the video. Let's move on, guys. Next up, we got Starbucks coming in at a market value of $6,470. I actually had Starbucks this morning. I don't that often, but I got the bacon, egg, and Gouda sandwich. It's pretty good. I'm a big Starbucks fan. I also had some of my friends' chocolate croissant, and that was also good. And then I got a vanilla sweet cream cold brew. So, sometimes when you're an investor in a company and you buy their products, it doesn't really feel like you're spending money because, in a way, you're a part owner of that company. So that's always kind of a rewarding experience. But let's not get sidetracked, guys. Starbucks coming in at $6,470, and that pays me an estimated income over the next 12 months of roughly $160, guys. Moving on, Hershey. Since the last update, there has been Hershey shares added, and we will go over that move. But the market value of Hershey right now is $6,257.92. And, as Hershey hangs out below this $200 mark, I am really interested in moving this one kind of up the ladder in terms of like position size. So I'm going to be interested in continuing to pick up Hershey shares. I would be comfortable right now taking this as high as, probably 40 or 45 shares. Right now I'm at 32. And let's take a look at that recent tranche. HSY, guys. This is one we've been tracking for I want to say months, but more than likely years. So it's been awesome since I've had this channel to have Hershey be kind of the first stock I've added during the duration of this channel, guys. And as you can see, I first started buying it in the low to mid 180s. My biggest fill in the first tranche was at 183. And then just as it's hung out under 200 I've spoke on, I just recently added 2 more shares at 198 and change. Guys, my average price on this one is 183, and that brings me to a profit loss open of $379.27. Even going over this, I feel we are due to kind of go through the Hershey fundamentals, or we're definitely due for a more fundamental video where we just talk about kind of, the different stories stocks can tell based off their numbers and kind of how I see value. So, be on the lookout for next video being more of like a going through Seeking Alpha and really talking in depth about fundamentals. But like I said, guys, I do want to pick up a few more shares of Hershey, maybe 8 to 13-ish more shares in the near future. We will have to wait and see, and we will also have to wait and see how long Hershey kind of hangs out in this consolidation, because it has been here for almost a year now. So I don't know how much longer it's going to be kind of in this sweet spot I have circled, but, I'll definitely take advantage if I can, guys. And that one pays me an estimated annual income of $175.36. Yeah, I don't know why I said that so weird. Anyway, guys, I'm tired today. Next up, we have Microsoft, ticker MSFT. It is weird. It's definitely weird to see this one, kind of this low in the portfolio, guys. However, I do want to mention, I still have, between Apple and Microsoft in this portfolio, I still have more tech exposure, I believe, than the S&P 500. So the way we can quickly calculate that is by taking the Apple position, $11,226.50, plus the Microsoft position, $6,233.25. That comes out to tech exposure of roughly $17,500, and we will divide that $17,500 divided by the total portfolio value of $64,000 times 100. My tech exposure in this portfolio is roughly 27.3%. And we will go ahead and look at, tech exposure in the S&P. I don't like to get too terribly caught up in this type of stuff. However, I do think about it. And on this channel, being so conversational, I want you guys to kind of see where my head's at. And, if I get a little sidetracked on something, I want to share it with you guys as well. This is as of July 11th. What in the world? Okay, I guess with all the technology appreciation we've seen, the S&P 500 currently has, as of the close on July 11th, had 47.33%. We need something more recent. Here, as of July 25th, the S&P tech sector was 37%. So, I guess my 27.5%, I'm a little underweighted compared to the S&P's tech. However, definitely do not try to model your allocation after the S&P 500, guys, because as we've seen, that can change very rapidly. We can have huge sell-offs very quickly. We've seen it in Microsoft. We've seen Starbucks' recent huge appreciation. Rather than focusing so much on sector allocation, at this channel, I really want us to focus more on value, specifically quality stocks at undervaluations, guys. That the whole point of that tangent, I guess, was to say that it doesn't bother me right now being slightly underweighted in tech as compared to the S&P, because I understand, every sector is going to have stronger and weaker seasons respectively, and I'm more focused on building, meaningful positions and quality names. Bit of a tangent there, guys. Microsoft pays me $45 estimated over the next 12 months. And these shares aren't going anywhere. I've taken it, down to 15 shares. It's at a current price of $415. We can see my trim on this one actually worked out really well. I trimmed 5 shares at $453. The all-time high is $468. So, it's not perfect, but we're never going to have perfect entries and exits. We just kind of want to, hit the main idea if we can. And I feel I did that with Microsoft. But again, I'm not looking to trim anymore. I'm probably not looking to add anymore unless this one, shows some serious signs of weakness and comes, at least back or below this 200-week moving average. So, I probably won't revisit Microsoft until it hits more like maybe the $300 mark even. Other than that, it is staying in the portfolio, and I'm going to enjoy that, compound annual growth rate of their dividend. And hopefully we see something really special with the yield on cost on this one down the road. And guys, last but not least in the portfolio, T. Rowe Price Group, ticker TROW. I spoke on this one a ton in the early days of the channel, and I don't want to say I'm like disappointed in myself, but I just have not built this one out as aggressively as I feel I kind of initially set out to do. It is still kind of hanging around my cost basis. My average price on it's 105. It's at 109. So I should be adding. However, as of late, I've been much more interested in Hershey's fundamentals and valuation. So unfortunately, T. Rowe has been kind of put on a back burner in terms of, me doing due diligence, me purchasing shares. But we will definitely revisit it in the future. This year, we'll probably go over it again into 2025. We're going to keep a close eye on this consolidation on the long term. And we're definitely going to talk about, where my head's at with this one, guys. Thank you so much for watching the video, guys. Again, my name is Cashflow Cart on YouTube. If you are not subscribed, please subscribe. I have to say that. If you made it this far in the video, you might as well hit the like button. That's just kind of common sense, I feel. And if you made it this far and you want to follow me on Instagram, that would also be awesome. My Instagram is linked below, and me and Mia will catch you in next Monday's video, guys. Everyone take care, and let's build wealth.